Supermarket shelves in northern Italy have been emptied in a wave of panic buying. That's as the country grapples with the largest coronavirus outbreak in Europe. Schools and tourist attractions in the financial hub Milan have mostly shut down, while some businesses have asked workers to stay at home.
I think this decision is important, although it's drastic in some aspects. But given the situation, we can't underestimate nor overestimate what is happening to us.
Fashion Week was partly held behind closed doors, without viewers and buyers. The Venice Carnival was cut short and other events were cancelled after a sudden spike in infections.
The quick surge in cases was a surprise. Given the trend in China, obviously we had adopted a series of precautionary measures that we could imagine, even if we certainly did not think the situation was resolved. The reaction of the government and the health system of civil protection was immediate and timely, and, as you saw, unprecedented decisions have been taken in our country in a very short time to protect the safety and health of everyone.
Authorities have placed a dozen towns in the wealthy regions of Lombardy and Veneto, where the deaths were reported, under quarantine. Police and soldiers have been ordered to check cars, as people need special permission to leave the worst affected areas. The region accounts for nearly a third of Italy's GDP, meaning the outbreak could weigh on an already weak economy. It's expected to grow just 0.5% this year and is now facing the rising risk of a technical recession in the first quarter. The virus recently also spiked in South Korea and Iran, while Afghanistan, Iraq and Kuwait have reported its first cases.
The sudden increase of cases in Italy, the Islamic Republic of Iran and the Republic of Korea are deeply concerning. There is a lot of speculation about whether this increase means that this epidemic has now become a pandemic.
The World Health Organization says it's concerned by cases without a clear link to China, where the outbreak began. It's now sending a specialist team to Italy to find out more about the infections. Sibel Karkus, TRT World.
Well, let's get more on the market turmoil caused by the coronavirus. Matt Maley joins us from Newton, Massachusetts. He's Managing Director and Equity Strategist at the trading firm Miller Tabak. Welcome back to Money Talks, Matt. Now, we saw the Dow plunge almost 1,000 points upon opening in Monday's session. That's really barely a week after Wall Street seemed to reach fresh record highs. You saw record highs as well in Europe recently. What's happening to the markets now? Are investors simply playing catch-up with the coronavirus?
It seems to be that way. I mean, at least stock investors, because we had already seen a move in the some other markets, like the Treasury market, the flight to safety, flight to quality markets, like the Treasury market, U.S. Treasury market, where bond prices had rallied significantly, and the yield, of course, dropped below 1.5%, and today below 1.4% on the 10-year yield. And of course, gold rallied strongly up towards $1,700. So we've already seen those markets moving in that fashion, and the stock market was kind of going on its merry way, much too complacent to what was going on with the coronavirus, and it's now starting to play catch-up.
So what are investors worried about here? That authorities don't seem to have a handle on it? What do you think will restore calm to the markets?
Well, I mean, the spread obviously is outside of China is the thing that's really raising the concerns. So, we're going to have to see that this thing is going to be contained, and even though it's starting to spread a little bit, that it doesn't become much more widespread. And I think probably one of the bigger concerns, of course, number one is South Korea, because when you get the combination of South Korea and China, the number of technology companies that rely on those countries, whether it be for their products or their parts, et cetera, can be very important. But also in Italy, of course, where there doesn't seem to be a direct connection with China, and that has people worried that this will become a bigger issue. So, but we do have to remember, too, the stock market has had an unbelievable rally, many global markets, the U.S., Europe, and around the world in the last 14 months. So the fact that we're pulling back today is really not, it's something that I actually, on two sides. On the one hand, I think it could fall further, and we could see a full-blown correction, but that would not be the worst thing in the world. I mean, again, after these huge rallies we've had, corrections or pullbacks are normal, they're healthy, but the fact that it's happening all in one day makes them a lot more scary than they usually are.
And of course, in terms of the wider economic impact, China, as we know, is still pretty much the world's factory, and we're seeing supply lines being disrupted as a result of this worsening epidemic. Tell us more about the economic impact that this outbreak is having.
Yeah, it's very interesting because it's not, people aren't so much worried the number of deaths, and of course it's on a human level, that's, you know, it's just a tragedy. But on an economic level, everything is just shutting down. I mean, we see what's happening now in Italy, where in northern Italy, which is kind of the manufacturing belt of that country, they've kind of shut down. And if you get the areas where things continue to shut down, other areas of the world, it's just the lack of anything happening. And if it extends over a period of time, you don't get it back. I mean, people, tourism is the obvious one. If people decide they're not going to go someplace, well, that's it. They may go someplace locally, but they're not going to suddenly go to China or go to Italy later in the year. They're going to go wherever they're going to go, or they're just going to cancel their vacation. And it's hard to make up that kind of consumption, I guess, as you want to say. So, and of course, when you multiply that around the world, it becomes a bigger issue. Now, again, I don't want to overstate this and say that, oh my gosh, this is definitely going to lead to a recession and we're going to have serious problems. But when stock markets around the globe have rallied so long, it makes it tough for them to rally further, I guess.
Sure does. Maley in Newton, Massachusetts. Thank you for your analysis, as always.